Okay. What's going on, Dr. Squatchman? Ian, what's going on? Malik, how are ya? Happy New Year, Happy New Year. Just gonna get settled here and get started, get all the folks involved and get everyone in here. That'd be great. Here, bear with me for a few more minutes, guys. Let's get everyone involved. Okay. Tiffany, hello. Warthog, what's going on? TP, how are you? AR Trades, how are you? Robbing Marks, hello. What's going on, Alejandro? Hal, Happy New Year, guys. Happy New Year. Gonna get started here when everyone just is able to tap in, and looking forward to a nice session, first of the year. Tomorrow, the first trading day, so it should be nice. What's going on, Paul? What's going on, Life Choices? So it should be a good session. Hopefully everyone has a pen and paper. Hopefully everyone has their laptops. If you're not, if you're mobile, maybe take notes on your mobile application. But should be good. Going through a lot of key technicals and stuff today. So a lot of levels. And last year we had a very similar session. Things got pretty crazy right out of the gates there in the first month or two. So always be prepared, always study, and that's the recipe for success. So we'll go through a lot of things today to cover what's going on. Paul, Wendy, what's up, guys? Just giving everyone a couple minutes to log in here. Looks like we quickly just jumped to 50 viewers, and we'll go when we get started here. Just give me a minute or two, and we'll kick it off. Hopefully everyone can hear me all right. Okay, we'll get started here. Alrighty. Excellent. So sorry about a couple minutes late there. Was booting up and getting things settled. Prep time for this. I prepped a couple hours for this session. Had some topics on my mind the last couple of days, and obviously going into the holidays. But first and foremost, hello. Name is Spud from Spud Zone. I'm sure many of you guys can have been following me on StockTwits or Webull. It's my two primary areas where I post trade ideas and post educational content. A little bit about me. I'm not a financial advisor. I trade off the technicals, volume analysis, momentum indicators, and macro trends that fit my trading style and criteria. My alerts and education should not be used for any information to buy or sell a security. Obviously got that out of the way, as we always do. But yeah, big year, guys, coming up. 2022 was pretty wild. And I'm going to talk through, it was the worst in terms of an investment approach. It was the worst returns in the market since 2008. So about 14 years of cash flow sort of out the window, which is never good to see. But when there's volatility, as I always say, as a trader, and many of you guys are looking to be traders here or learning how to be traders or already are traders, it's great. It's a great opportunity when there's volatility to make money going up or down in the markets. And here we are to sort of learn how and sort of learning the techniques and strategies that I've been using for years. And so, kind of run through that. Today's session is going to be a little bit different than the past sessions we've done over the past, year or two and some of the past couple months. So first off, I'm going to look at a lot of big picture. And what I mean by big picture is sort of setting out from a weekly, monthly chart perspective on certain tickers, indexes, and really seeing like where we are in the longer term sort of bull market we've had over the past decade or so. And if there's any wiggle room or room left for this bull market to continue running, as it has pretty substantially over the past decade or two. So topic one here, we're going to discuss what happened in the markets 2022. We're going to go through this S&P 500, the SPY, the Dow Jones, and the QQQ, which performed, which didn't perform. As many of you guys probably know, you know the answers to all three. But not only the fact that we know the answers, more so looking at the charts. what's been strong, what's been weak, et cetera, et cetera. And that's how we can use some analysis to make potential predictions going into the first quarter of this year, right? We start tomorrow. Funds are back in the office. People are back at the trading desks. I'm expecting January to be quite interesting. I have no idea which way we're going to go in the market. A lot of folks say seasonality is pretty strong. We could go, we could maybe pop 5-10%. Some are saying after a bad December, we could drop 5-10%. No one knows. But all we have to do is trade price action, okay? And price action is the telling between buying and selling securities and see where the price action on the chart is telling us where things can go. And then we use charts to align those trade strategies. So topic 2, we're going to discuss price action. I love to discuss price action because price action dictates where a stock, an index, a commodity, a contract, where that potential move may be going, up or down. And I'm going to talk through some examples of price action, not only intraday price action, like your 1 minute, your 5-minute charts, your 10-minute charts, your 15-minute charts, but also from a daily chart perspective. Like, what does positive or negative price action from a daily or weekly charts perspective look like? So I'm going to have a couple examples there for you guys. Topic 3. The gold sector. I want to talk gold. I've been reading a ton about gold, done some studying on gold. The charts are actually looking quite well for potential breakout. And I think that my big joke here is gold going to be the golden ticket in 2023? Crypto clearly was not. Bitcoin clearly was not. It's down 60%. Everyone was saying, oh, crypto is going to be the hedge. It's going to be the hedge. And it just hasn't. It hasn't been the hedge in the last 2, 3, 4 years. And I don't know. Is it going to be the hedge in this year? No clue. But from what we've seen in 2022, as inflation was going up and the Fed rates were going up, Bitcoin was actually going down as a risk asset. So to me, that sort of, Bitcoin's the hedge, crypto's the inflation hedge, that thesis did not play out in 2022, for me at least, from looking at the performance. So maybe people flock back to gold. I don't know. The charts look like there's a telling sign where they might be going up. I'm going to talk through some of the charts and some of the things going on in the gold sector. I'm not a commodity trader really, but I am a technical trader. So that is going to be an area where I'll be watching early 2023 to see if there's any potential moves in that sector. Topic 4 is just going to be talking about a little bit about a couple mistakes and things I want to switch/change going into 2023 that I may have not performed well in 2022 in terms of, there's a couple examples, letting runners run, stop losses, in too early on the trade, having the prediction probably pretty tight and nitty, and then taking a loss instead of letting that trade potentially play out for days or weeks to come. There were so many trades last year where I just maybe got scared out of position, maybe took losses pretty early, maybe sold too quickly. And so there's a ton of those I'm going to talk through that I maybe want to start to focus and shift away from so I can maximize the best strategy. And then really just a quick sort of motivational speech, for 2023, 2022, I think the stock market lost over $10 trillion. A lot of people lost a lot of money. A lot of investors got pretty screwed on a lot of things. And that's what happens in really bad bear markets. And 2022 was a really bear market. It was not a fun year. A lot of folks did not perform well. That's what traders, investment shops, that's funds, that's index funds. It's the standard, 401k, standard IRA got absolutely annihilated. And, they're never fun years. Every 10 years, these types of pullbacks happen. And, it's never really fun to be a part of one. But, motivation for this year is that, that's in the past. So I'm going to talk through some of the things, how to keep your sort of emotions sort of stabilized and sort of, keeping your eyes on the prize per se and just trying to better yourself each day as a trader. I'm going to talk through some of those tips. You're only as good as your last trade, and it doesn't really matter what happened last year. This is now a new year, guys. So that's sort of why we're here, and we continue to power through. So those are the 5 topics today. Today's session run time is going to be about 1 hour, 50 minutes to 1 hour. Given the topic performance here, we have 5 different topics. I'm not going to be jumping into our standardized 30-minute, 15-minute Q&A after these topics. I'll save that for maybe the second session of this year. So do keep a pen and paper. If you do have any questions, obviously you can reach out via DM or any of the tech mods that are within the channel right now. As I mentioned, introduce myself, Spud from Spudsman. If you guys missed the introduction, I went through the disclaimer, I went through everything else. You guys can follow us on Discord. We have a premium Discord. You can see the channel within the Discord link on the side. We have thousands of premium members, tons of testimonials. Feel free to check us out. If not, feel free to hit the subscribe button here on YouTube. Everything I do is for free and content and all educational purposes. So let's going to jump into topic one here, guys. Like what happened in 2022? Let's talk through the charts, where things can potentially go, what performed, what didn't perform, where big money was going into, where big money was coming out of. And those are all really important when you sort of talk through a lot of that stuff. So we have the Dow Jones, your industrial names, your material names, only down 8 or 9% on the year. And you think about that number. How is the Dow Jones only down 8 or 9% with the Fed's absolutely increasing rates at an astronomical rate, fastest they've ever increased them since 1970s? And yet the Dow Jones it dropped below, didn't even drop past 10% on the year. So that's quite impressive in terms of strength. People are flocking into the dividend names, collecting those premiums, collecting those dividend names, and then taking advantage of those stock growths over the year. So I'm really, really interested to see what happens to the Dow Jones in the first 2 quarters of this year because technically it's holding strong, but it's also technically it hasn't been a sector, hasn't been an index that took the hit. So you have S&P 500 finished down 19% on the year. And I say, even given said and done, after what happened last year, I think the S&P down 19% would probably, if you're a long-term bull in this market the last couple of decades, you're probably saying, you know what, that was a big win. And so, S&P was down 19%. Now, if you're a big technology player, you're a large tech guy, you love the tech names, your QQQs got slammed this year. Those finished at about 33.1% down on the year. That is a sector that got really decimated, really, really beat up. Some good names just thrown in the garbage there. Some really strong names down 50, 60, 70%. And I think there'll be some opportunities with those names if things continue to get uglier within the markets, or there might be a switch in terms of Fed policy where risk comes back on. Those are the names everyone's going to try and flock to. So keep an eye on that. And then really just a longer, bigger term macro picture. Rates continue to go up, putting pressure on margins. Margins, EPS, and growth. Fed's goal is to really limit growth in the economy. He wants to crush some jobs. He wants to crush wages. And so, if they want to do all that, there's no need to fight. My belief is there's no need to fight it. Everyone didn't fight the Fed for 20 years and was made prosperous gains, investing in the stock market over those times. Now the Fed's saying, listen, guys, we actually need to slow the economy. There's a real big problem. It's called inflation. We need to slow this down. And people are saying, no, you're not going to slow it down enough. We're going to continue buying. And a lot of dip buying happened in 2022. And I don't know if that liquidity or dip buying is going to continue in 2023. So that's going to be the big question. Are people going to continue just viciously buying dips? And I don't know. We'll see. We'll see how the inflation looks. We'll see how the jobs report looks in the first couple of quarters. And I think that will be your telling sign of where the market could potentially go. People love the CPI report, so keep an eye on those. Anytime you see a CPI report coming up in 2023, guys, those seem to get a lot of momentum up or down and big market moves. I'm not sure if we're going to continue to see that in 2023 fiscal, but that's going to be quite interesting to see as well. So let's talk through the charts here, guys. I'm going to go over the losers first. QQQ. I'm going to quickly walk through this weekly chart because it is. I will say, guys, the QQQ chart is quite interesting here, and a lot of these names. I know Apple's not in the QQQ, but a lot of the Amazon, a lot of these names, guys, are really hovering around their 52-week lows. And so if you see any type of market pressure here from a technical standpoint, these names could have some more downside just based on where we are in the charts and people sort of just bucketing them in as, I don't want to be in these names anymore. And you get that negative sentiment, and that's when your drastic moves can occur. So, we're in the QQQ here. We've had a nice triple bottom around the 260s. And see that double bottom here, recovery back. The 260s is where the run sort of really started and really accelerated all the way to 405. And we've retraced now about 30% on the year down here, 31% here, and 33%. And so this year's going to be tricky. Are we going to consolidate here and then make that really break down? Our COVID lows is quite interesting, is about $1.65. So, if this were to go to even before COVID lows, 232. So there could be some downside into the 230s here this year on the Qs. Potentially even lower, maybe to the 2s or 215s. There's a nice candle here at around 208. This is the weekly chart. So this has been in a downtrend for about 16 to 18 months now, guys. And if that downtrend continues, your levels I think would be at this top peak here. Quickly draw it for you guys. So the horizontal line, I like this top. I call this top wick. I'm looking what I like to call for the new traders, right? See this little wick here, this little one line sort of going up. That's what I call wick. And when you see something top out like that in terms of the wick, and then they start to sell, 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 and then we see a candle down, that's what now I call a big resistance. And now in this case, it could be supports because of where this name is, right? Where this index is. So this would be a resistance here, but I think anything under this level would be extreme bear territory. Probably honestly, a good opportunity down in here. Anything from the QQQs 160 to even up to like 220, 200 could be a nice opportunity to try some long positions in here because, that would be almost a 50% retracement from the highs. That would be a nice little spot if we got down, the markets got back into here. I mean, look at that. That would be a drastic move. So I think I would like that opportunity maybe around the 200s, 160s. That would be a really nice spot for maybe some long-term buying, sort of that mentality of sort of closing your eyes and buying for the long term. If you bought in 2008 and you bought the crash, right, and everyone's saying sell, oh my God, the markets are going to zero. You bought that dip. I don't even know what you'd be up now. I mean, it'd be something obscene. $22. If you just bought the QQQ index at 22, you're up over 1,000%. Which is pretty crazy. It's 14 years, you're up 1,000%. You're making almost 100% a year. And that's just if you sold now and you bought the dip. So that's pretty substantial, guys. A lot of even Warren Buffett, all those guys, when they buy the market extreme panics events, it ends up, the last 5-6 crashes since the 1970s, which I'm going to talk through with gold, has been really rewarding for long-term investors. So obviously it's really hard to time bottoms. So it's always great to scale in. You'd buy, 1/5 position size on every big dip, 2/5 position size, and you sort of scale in on an average. And that's what large and smart money typically does when things are falling knives. So that's your QQQ. Let's go through the SPY. Quite interesting. It's actually holding up a little bit better than the QQQ, although I do think there could be some more downside. As I said, there also could be upside. I do see a large move coming in the SPY and the Dow Jones specifically. And that could be a 5-10% move up hitter, or that could be a 10, 15, 20% down hitter. I don't know. I like the 350 trend line here on the SPY, but I also like this line I'm going to throw in for you guys here. I do like this line down in here. I think the 330 zones, 310 zones, if we got into some extreme bear case scenario, China invading Taiwan, something happening with Russia, I don't know, just anything extreme, and we were to lose 10, 15% on the indexes, I personally think you could probably maybe get to that 280 line, and a lot of folks really love the markets in that 280 line. There's a ton of demand at 280 to 310 zones. So if you ever see the SPY in those zones, I'm not saying we're going to get there. I'm just saying, that's the charts. If we get down to that 330 level, it might be a nice bounce area. We get to the 300, nice bounce. 280 would be my sort of line in the sand where you're sort of, okay, I got to start buying some stuff. That's sort of how I'm going to look at the markets this year. Because if we get a really bad first half of the year and, everyone's saying recession this, recession that, companies aren't doing well, market always prices in a recession far, 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 far before the U.S. economy even gets there. I mean, a lot of these names are already priced in for a recession. If that recession never comes, I could say watch out above. We could start getting some major volatility to the upside if this so-called recession doesn't come in the United States. So keep an eye on a lot of those, high beta names that have gotten smoked and they're sort of pricing in just negative growth for years to come. So, keep an eye on a lot of those names. Talk through some of those later. This is an S&P 500 chart. So I'd like your 330, your 300, 280 to the downside. Your upside, I think, is a little bit fairly limited in the first part of the year. Maybe your 395, 410 zones. 410 is a big resistant line. If you can remember, 410 got directly to the T rejected, big rejection. This was on the weekly chart about a couple weeks ago, guys. And this got fully rejected at 410. It was almost a pivot to the T. It was like so great as a trader. You just saw it hit 410 and everyone just piled down the sells, hit the short button, and a lot of folks sold for profits in the 410. And then your next pivot point on the S&P 500 on the SPY here would be about 430. Nice wick down. So your resistance to the upside are about 390, 410, 430, and if things got extremely crazy to the upside, your top wick where I think you'd probably want to risk off would probably be your 450 if they ever got there. That's a really nice spot to take profits. Okay, so that's the SPY. And then we're going to talk through the Dow Jones, guys, because this thing is an absolute machine. I've taken a lot of losses recently in the last couple months trying to trade out of this Dow Jones premium. I've been trying to short. I've been trying to take puts on the index itself. I've tried to short names like Caterpillar. I've tried to short names like Ulta Beauty. I've tried to short names, like in that Dow Jones complex. And, it's only 32, 35 companies that really make up this huge market cap of the Dow Jones. And, if the Nikes of the world and these other names are not crashing and burning down, Verizon was the worst performer, one of the worst performers in the Dow Jones, down 30% on the year. Big dividend, 6%. So these names are big dividend names. And if these names aren't coming down, this index isn't really moving down much. The volatility you haven't really even seen any volatility in this index at all. And in 2020, you had a nice move down from about 30K to all the way down to 18K. So that was like a nice, 40% retracement in 3 weeks in March of COVID. We haven't had any downward pressure in the Dow Jones, and that gives me two things to think of in 2023. Either we're going to have a red year of the Dow Jones and we finally get volatility out of the gates, or people are going to continue to pile into, in my opinion, overbought, overpriced dividend names. Some of these names in the dividend complex here are trading at PEs, decade high PEs, where they're valuing that they're going to continue to have even greater growth than they've had the last 5 to 10 years. That to me is a red flag. That to me, I would, as a short, I'm looking to maybe start to be a seller of some of these names. You have names at Ulta Beauty, Caterpillar at all-time highs in a huge Fed increase rate environment. That is taking liquidity out of the markets and pressuring margins. Yet these names are trading at a PE higher than they would in 2012 or 13 or 14 or 15 or 16 or 17 or 18. So those to me are some red flags of why I'd be hesitant buying any Dow Jones names here. That given said, I do think there are some fire sales that happened last year, tickers like Verizon that could, have a 5, 10, 15% green year. There's a lot of really oversold names, but there's also a lot of really overbought names. So the Dow Jones is a little bit more tricky than the S&P 500 and QQQ. I think in terms of fire sales, I think you might be able to get some better risk long-term on some of the QQQ and S&P names. I'm looking to be a potential seller and looking to probably try and time some puts in the Dow Jones complex here in early Q1, Jan-Feb of this year. And obviously I want to see how price action, I want to see if this complex does get attacked in the early part of the year, or it has a strong chart, I said. So, people don't fight price action. Maybe this pushes to new all-time highs. I don't know. I can see it going up 10 or down 10 very easily. So we'll see what happens in the Dow Jones complex. That's topic one, guys. In terms of topic two, we're going to jump into just discussing the price action. And I'm going to give you guys examples because this is really important. And I think what's really great about this is that price action sort of tells, how do I describe this, guys? Price action basically tells you the story. It's like a book. When you read each page and flip each page, the book, it can't make up things on the fly. I like to say every page is its new page, but it's already written. That's sort of how price action is. It's not fake. It can't be made up. It's just the numbers. It's what's happening with the liquidity. It's what's happening within the chart itself. Okay. So in terms of price action, I have 4 examples I found for us today. You're going to see me always say, this is great price action, or this is bullish price action, or you're going to say, this is terrible price action, this is, garbage price action, or, there's tons of sellers on this tape. And I'm going to talk through different examples of both, actually, bullish and bearish. So, given that we were just at the Dow Jones, we might as well just quickly stay on it, okay? Bullish price action, right? We're building out what I call higher and higher lows, building out to higher and higher highs. So for example, the Dow Jones consolidated a lot, dipped, then bounced back up, dipped, bounced back up, dipped, and then went higher than that bounce back, right? Same thing, dip, now we're higher than the bounce back, right? So this is what I'm looking at as that would be considered, sneeze. That would be considered bullish price action. Excuse me, guys. Getting some allergies here. That would be considered some bullish price action. So what would happen here is, I'm looking at the Dow Jones as maybe this breaks out into all-time highs, or maybe we reject and finally the bearish price action starts to come back in and we finally get below that 30K line. I think that 30K line is a nice line in the sand Whereas if we get below 30K in the Dow, I think you'll probably see some major selling down at 26. So as a trader, if I see that this 30 line break, the 30 trend line, I'm probably going to look to go short on these names because that means there's a lot of people saying, okay, I'm running for the hills, taking profits, et cetera, et cetera, et cetera, et cetera, et cetera. So this would be considered bullish price action. And now I'm going to talk, this is from a daily and weekly chart, right? Let me show you the weekly chart, right? The daily chart, excuse me. We form a double bottom, bullish price action. We get there. And then we get through this level here. Let me move this line down, right? And it's all about resistance line. So if you break through a resistance right here, this would be like a triple wick. You break through it. Okay, as a trader, you're saying this is strong. Let me buy for upside. Then you're buying in here, and then we're selling back in the strength. We then fill this upside, 32.5. Then oh my gosh, it breaks out again. So now as a trader, you're saying, wow, we're still strong. I'm going to maybe buy this break. I bought the wick break, and now I'm going to sell in here. And as a trader, you're saying this is strong momentum. It just builds higher and higher lows and breaking out. What a move that was, right? From down here in early 2022 all the way to up here. I mean, that's a massive move. That's a 10-20% move from the bottom to top in 2022. So that just shows you everyone was buying the dip in these index names, right? And this is bullish price action from a daily and weekly chart perspective. I'm going to be also showing, like, as a day trader, what I'm looking for, where the setups are, how I'm looking at a potential. Let's look at Kala. This is Kala Pharmaceuticals. It's had a really nice trend line break over with news and some analyst upgrades at Oppenheimer, Wedbush, whatever that was going on. But it's been, just regardless of reading the news, let's just look at the tape because, as I said, the tape of price action tells you where a stock potentially could be going. And then you sort of just align it with resistance points on the chart. So I just want to kind of talk through what I call it's almost like the stairway to, I call it the stairway to heaven, stairway to the sky, whatever the heck you guys want, however you want to call it. But this is not a famous saying, but a typical trader saying, and it's called like an HOD break. So that would be like a high a day or a high of, you could see an HOM break, which would be a high of move break, which basically means like whatever the highest of the move recently was, we're breaking through that. And a lot of people play momentum breaks as traders, so do algorithms. So if a stock's being bought up and now it's, sells off, profit take, then you want to see it consolidate. The word consolidation, where a stock's sort of being accumulated or not being sold off hard or being bought up a little bit, and it's staying steady. It's staying on a steady progression, up, down a bit, up, down a bit, up, down a bit. This could be for hours. This could be for minutes. This could be for days. This could be for weeks, whatever it could be. And then finally you get a big move, and that could be up or down in a ticker. In this case, I'm going to talk to you guys about bullish price action in Kala, right? So this was bought out of the gates, 930 here. This is about $8 a share. Consolidates in here between $8 and $9. The resistance here out of the gates was around 950, right? So if you're a trader, bang, all of a sudden this candle comes in, a 10% candle, and you're breaking above 950. So as a day trader, momentum trader, I did not play this name not once all time. I watched it run from $6 in pre-market all the way up to $40 the other day, and I didn't trade it once, and I just stood there watching it with my hands behind my back, I guess here, and I'm sitting here with my hands. I'm like, why didn't I trade this? This is a great criteria, great setup for me. I'm on the 5-minute chart. And I never took that risk. I never got involved. But here was the wick, 950 wick. When I saw this break over 950, and I didn't see it break over 950. I'm saying when I'm looking at it, studying now and analyzing this chart, I see the break at 950. You have new traders that come in and bought the break because now anyone who shorted or sold down in here is now red, and now new bulls are taking this to a new level. So after this break, you have new traders come in and want to take it to new highs. So if you bought in here, you got a 1 candle, 2 candle move, maybe even a 3 candle wick. Now we top out at around, let's say we topped out at around 16.5. Okay, we top out at 16.5. Everyone who got in here is now up a quick, wow, almost 40, 50% here. They're now taking some profits. Now you're going to see it get a little choppy in here. Chop, 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 chop. Okay, profit take, profit take, profit take. Maybe some new shorts. Okay, it broke. Everyone stops out. Okay, profit take, profit take. Then we start to get this sort of consolidation between a 12 level and 14 level, 10% consolidation for the entirety of almost the entire day, right? Okay, then it's like, okay, cool. We held these levels. Now, if you're a trader and you were saying, okay, let me see what I can attack it with tomorrow. Are we going to sell below 11 and then finally pull back all the way to 8? No, we actually held this trend line We move it down for the head, held this trend line all the way through. One top, one bottom, two bottom, three bottom. And we just kept bouncing off this trend line in the 12s, guys. So if we keep bouncing off the 12s, at what point do we then break out to new highs? Well, that's what we saw, right? Next morning, 9:30. Well, chop, chop. It's a holding 14s, never went, finally got to the 12s. 13s, never even got to the 12s. And we held above those 12 trend lines and buyers came back in. And we get past that 9:30 break again at 17, right? Where's that wick? Right here. Where's that line? Right here. Let me quickly put this in, right? So this would be called bullish price action. See this wick? One top, two top. That's what I call the wicks. Three top wick. We get rejected in here, right? That was the day one run, right? Okay, we get rejected. So everyone knows that's the resistance, right? 16.50, 17 bucks. Guess what happens, guys? We see volume come in. Guess what happens? 16, 17 breaks. And then what do you get again? You get new momentum traders. Okay, that's a new HOM, a new HOD break. I'm going to buy the break. I'm going to put maybe, if I'm playing this, if I'm trading this, as I said, I did not trade this. If I was trading this, maybe I buy the break. I quickly put a tight stop loss in maybe the 16s. Keep it 5, 10%, keep it tight. And then I'm going to ride this thing to the upside. I'm going to ride this puppy from 16, 17, all the way to 22, 23. Maybe I said, you know what, I'm going to get a little greedy. I'm going to move my stop up to 20. So I automatically make 10, 15, 20%. Oh, wow. Then you're going to want to be a seller into here. Where is the squeeze candle? Bang. This is your squeeze candle, your 18% squeeze candle from a 16 break all the way to 30 bucks. Almost 100% gains in about 2 hours. That's unbelievable, unheard of. This is where you want to be selling into FOMO power strength. This is where you want to be selling into the squeeze candle. Right? We're buying the consolidation, maybe keeping the stop loss under the 12 spot. The trend line here has been 12s. Then we're going to want to be sellers into the strength in here. But okay, that's fine. You made a great trade. Everyone, I made a great trade. Then I always see people, oh, woulda, shoulda, coulda. Oh my God, this thing ran the 45. I should have held. No, you made a great trade, a great read here. Can't be greedy, walk away. But no, Kala continues to show strong price action. Now we start building out consolidations in the 20s. So now we're holding 20s. Now it used to be 12. Now we're moving the trend line up and we're holding this level, which is 21, 20. We never got below that last week. Then we said, okay, no, we took this to a new level. Momentum and buyers took this now to a new level. Volume still increasing. We're now moving this up to 45, in pre-market. All day long, this thing, sellers tried to smash it all day long at 40. It never got below 40. It never got below 30. Now the trend line seems to be at around 29 bucks a share. So let's see if 29 holds next week. If 29 doesn't hold next week, 23 would be my next stop. If 23 holds, maybe you want to try 23 for a bounce. Maybe you want to try 21 for a bounce. That breaks below 21 next week, all rules are off. I think there's now then that full gap down the 13s to be filled. So, these are the technical levels, but this shows you, breakout, new highs, consolidate, breakout, new highs, consolidate, breakout, new highs. You see how that works? And that's what I look for in terms of price action. When I take a trade, guys, the thing I always teach new students and new traders, there's 3 things I look for in a trade. The first thing, it must have liquidity. It's got to have a ton of volume. If I can enter and exit on big liquidity, that's the first thing I'm looking for. The second thing I'm looking for, which is really crucial for my criteria, is called range percentage. A stock that is moving really fast up or really fast down. That's when I'm trading at my best. That's when you can maximize big percentages. And that could be a stock being fire sale halted down and you're short, which is amazing, or that could be a stock halted up on great news or going up to the upside, right? And then the third thing is that it has to align with the charts. So wherever you enter or exit a trade, you have to say, okay, this is my target, this is my stop loss, these are my target levels, and you have to have a plan before you enter that trade. So those are my 3 criteria for entering a trade: liquidity, range percentage, gap percentage, up or down, whether you're short or long, and then the third thing is teeing up the chart. So where do the sort of the T's and Q's align, right? Okay, so that was that's bullish price action. Now I want to talk through a bearish price action, Tesla, right? And I'm going to take a bigger time frame, a daily chart perspective, okay? Now Tesla's really funny because at around 200 a share, actually even at 400 a share back in 2021, everyone was calling me crazy. I thought this thing was the most overvalued pig. I always called it a pig. And I've been saying that I think the drop is going to be vicious. And I've been saying this for over a year and a half. And finally, the drop actually was really vicious. And once we sort of broke through this 180 trend line, 170 trend line, I think this is right sort of when the Twitter deal happened. We just went into John Mayer free falling. And this thing went on a 9-day, 38% drop in 9 days. This thing dropped from 1 trillion market cap to almost 350. I think 340 billion at one point the other day last week market cap. We had a beautiful cap bounce, 2-3 day cap bounce off the 110s. Keep in mind that 108 is going to be a really key support lately. If we retest that 108 and we go lower, this name could continue downside. As I said here, this sort of the supports and resistance, it bounced 108 perfectly and bounced up. We got a nice pop. But as I said, Tesla's so much in a downtrend, it's going to be a little tricky getting this thing all the way back up, and especially in the given current environment. But we had the trend line 130s. I thought would be a nice spot in here, 130s for a potential bounce, and we blew through it. Here's an example of really bearish price action, okay? And what I mean by that is you can read the selling through the tape. You can feel it. You're sitting at your monitor. You're sitting at your phone. You can feel it. I mean, you can feel it. There's little bounces and then bam, rejections to new lows. Little bounce, bam, rejection to new lows. Little bounce, bam, rejection to new lows. And you can just feel the tape. Volume super heavy, volume super high. Tesla was trading 200 million shares a day in the last couple of days, 150 to 200 million. That is absurd for Tesla. The average volume was 38 million shares. We're trading like 5x normal volume. That is crazy. And it couldn't get a bounce. That shows you have to respect that kind of selling. 10, 15, 20 billion. I mean, you got to respect that kind of selling, right? You can't not respect it. I mean, that kind of volume, that kind of selling to the downside, you got to respect it. And, that's what happened. It just went into a 9-day free fall. I probably imagine a lot of this, billions on billions on billions, tens of billions was margin called. I imagine a lot of this was marginal selling. So people that didn't want to sell but said, I have to sell. I'm sure you had a lot of that over the last 2 weeks. You had crazy heavy put buyers. I'm not sure if they knew something around the margin calls. I'm not sure, whatever happened, or maybe they were just reading how heavy this tape was becoming, that it could just hit a free fall. It was dropping 8-9% a day, guys, for a while there, which is drastic moves. I mean, that's 40, 50 billion market cap a day, guys. And this thing just fully gapped down and it finally found a little bottom help at 108. And that's going to be a line. That's going to be a number I'm going to be watching, 110 zones over the next couple days, next couple weeks. If you're a Tesla bull, you want to see if this level sort of consolidates here for a little bit, for maybe a week or two before maybe jumping in or out. If we get a down move the next couple of days, I think selling will pick back up. Maybe we could even go to new lows, maybe even that 90 spot before totally bottoming out. If you're short, maybe want to be, I don't know if you're going to want to be pressing here again necessarily, unless you're shorting from the 180-200 line and you could press a little bit more, fine. But this is 110's that nice level, 90's that next level. Things got really bad in the markets and Tesla really started to hit the gap down again. $60 would be your extreme, all-time extreme sort of bearish signal, which I think anywhere between 60 and 90 bucks as a trader or as a trade, just for me in general, I'd love to be maybe long in that zone for a nice, really nice potential big bounce off that level. Anyway, so that's Tesla. That's bearish price action, right? Then I want to talk through the last name real quick in terms of bearish price action. I just realized I looked at the time. I'm talking a little bit slow. I'm going to try and speed it up. FUTU. This was actually a short out of the gates. I alerted to the team, which was probably our best play on Friday amongst the winner. I woke up on around 7 a.m. And I looked at this FUTU name. It was down 29%. Really big market cap, 12 billion market cap. China name is getting decimated from overseas selling, just absolutely shorted to the oblivion. And I said, wow, this could be a really nice potential short puts idea. But I'm not going to chase it down 30%. So what actually ended up happening at 9:30, there was clearly a switch here on a buy signal. And this popped 3%, 6%, 9%, 10%. 12%. So this popped 12% out of the gates. Actually about 15, 18% there. And I alerted a nice short/sell signal in the 48s. Actually located 40 puts for this week expiration. And we just started to sell off. So, if you're short and looking for bearish price action, and there's going to be a lot of names to short, I think, this year on great opportunities, you're going to want to play the same way. So how I play these is the same way I'd play an upside potential, right? If I'm buying a dip. So if I'm breaking through supports, on a wick, I'm going to go short and then maybe try and sell here, right? The gap fill would then be to 44 from a 48 break, right? That's a 10, 15, 20, 12, that's a 10 to 12% move on a mega cap, not a mega cap, but a big $12 billion stock, right? That's a big move, 10, 12%. Puts and calls are flying on these kind of names, right? The volatility is outrageous. So then we just start to see algo selling the entire day from 9:45 all the way to new lows of the day. You short at the top here from 48, 49s, you get all the way down to 39. I mean, guys, that's a 20 to 25% move in one day on a $12 billion stock. That's a drastic move for those new traders or people that don't really realize the magnification of that move. And so you short in here, just keep your stop loss pretty tight in case you get bounced out like a big wick up or any news hits or anything like that. At least you cover yourself on stops. When I short, I always just move my stop loss down with the actual ticker itself. So when I'm shorting a mega cap, large cap, I'm shorting Tesla, or whatever it may be, I'm moving my stop loss down with the ticker selling down. Therefore, for any big jerky reactions, any news hits, any halts or whatever, and it comes back up, I immediately stop out with profits, where I immediately stop out at my entry. So that's how I mitigate my risk when I'm going naked short on shares. Now, if you're buying puts, obviously, puts or calls on a stock going down or up, your risk is basically whatever you bought the premiums at. So, that's good about options is you can only lose as much as you put in. When you're naked shorting a stock, there's unlimited risk, of course, right? Because it could go to the upside. But I saw this heavy selling out of the gate. Pre-market sellers were attacking it. So I figured, you know what? Someone is really pushing this down. Major sellers are pushing this down. I'm thinking that's going to continue at 9:30. And this gave me an awesome 10, 12, 15% opportunity to fully reject. And that was just an unbelievable trade idea here from 48s all the way down to $40. This was probably one of the better trade ideas over the last couple of weeks. Just a gorgeous, gorgeous move. 20, 25% short in one day, down from there. Puts, I think, ran almost close to 300% there. Intraday, I think, ran 1,000 on the weeklies, but unbelievable move here. That was a ticker FUTU. That's bearish price action, okay? So now we're going to jump into topic number 3. We discussed price action. We discussed how the market's performed. Now I want to talk through my fun one here. I've done a ton of research here. Is gold, guys. Sector gold. Let's talk gold. And this is really interesting. I found an article, central banks haven't bought this much gold since 1967. A lot of investors like to follow central banks. If they're removing or mitigating policy, they're keeping things lenient. Tech grows. Tech growth flies in a very low interest rate environment, as you guys just saw over the last decade, right? Now we're tightening up. Liquidity and cash is sort of frowned upon. And what are they doing? It looks like central banks, Turkey, overseas, everyone's buying as much gold as they can get their hands on, it seems like, since 1967. I mean, that's 50, 60, 70 years. That's pretty crazy, right? Then I also, there's a technician I love to follow on Wall Street. If you guys don't follow him, it's Carter Braxton Worth. He's purely a technicals guy. He eats, breathes, sleeps, and makes his trades off technicals. That's Carter Braxton Worth, a great technician I follow on Wall Street. I've been following him for a few years now. He's a CNBC correspondent as well. You probably have seen him. He's just a purely technical trader. He's got some pretty great ideas, but he also posted this gold chart. And I've seen some of the gold people. I've seen a lot of bullish analysts on gold, but I also seen what's really intriguing to me, guys, is the gold was only up about 1%. While the indexes were down 20 and relatively 33, right? And it's really weird to me because if you look back, and I took this from his tweet, Braxton Carter Worth's tweet, when we have the biggest market crashes back to 1929 here, what's really interesting is that gold had crazy outperformance. And now that Bitcoin and crypto is sort of, I think that thesis is just out the door and no one trusts it. The Sam Bankman-Fried thing didn't help. All these bankruptcies didn't help. I think there's a lot of high risk there. And I think that sector personally could be out of commission for a couple of years to come, only because the negative sentiment there. And, unless maybe regulation comes to it or something like that, I think it's going to be considered that black hole, gray area, wild, wild west. And I think what's going to happen potentially, and this could be a potential breakout year for gold. Look at these percentage returns in 1 year based on when the markets went down a lot. If the markets continue to go down, I think gold could go to all-time highs and really sort of start to really break out. 185% in 1970s. That's an insane performance. And so the index I like the best would be GLD, and that's the gold index, S&P Gold Shares. And so I then said to myself after reading that article about gold, after seeing the percentage returns with gold and only seeing that gold was up 1% last year when the markets crashed, I figured to myself, maybe gold is poised for a big breakout in 2023, maybe 10, 20, 30, 40%, somewhere in there. And how I'd look to play that is through the index. This is probably the safest way to look at it, GLD. And you just set up your stops and look for maybe dip buy opportunities. But this chart is looking really nice. We're on a weekly breakout chart here. We're filling gaps. We have nice resistances at 180. We also have a big resistance gap at 175. So you got a double top, triple top, quadruple top. 175 is really your line in the sand here. If we break over 175, we could be seeing 180s, 190s, 200s. And keep in mind, gold doesn't move like this index doesn't move much at all. And when it does, it moves. And what I mean by that is your call and put premiums in an index like this are like 14%, 17%. So if volatility were to hit this index, some of these contracts on the weeklies, monthlies could be moving hundreds, if not thousands of percentage gain potential moves up and down, right? So this is going to be on my radar in the first 2 quarters of 2023. And I really want to see if price action comes in bullish over the next few days of the first part of the year. Because if so, that means people are taking their risk on in gold. They're buying gold assets. And this is an index to help you sort of track that. And given where we are in the chart, there's a potential opportunity for maybe to go all the way up to all-time highs, which is the 190s from the 170 line today, which is minimum 10 to 15% move to the upside. And so I'll be looking at potential maybe long calls, February, March, 175, 180 calls. As I said, I'm not buying crazy out of the money because a 10% move in gold is like a huge move, as I said. So, I'm looking at maybe those trend lines, 175 calls. But if I start to see this thing start to move in early Jan, early Feb, I'm going to try and jump on this bandwagon and scalp some pennies off this move to the upside. Keep in mind, any dips down to these levels, 137, 150, those would be my areas. Potentially, I would look to maybe try and long some gold if we ever get those dips down. Maybe, and then sort of a buy gold dip if we ever got to the 120s down in here. So keep an eye on GLD. That's the gold. As I just showed you, central banks are buying records amounts since 1967. So that's like a thinking, it's like a thinking box in my head. Why are all these central banks loading up on gold? Maybe they think that's going to be the biggest sort of asset value over the next few years. So maybe it's gold. Then you see the outperformance in gold from a technical perspective. It's outperformed since 1929 when there's down markets. Every market crash, look at this. This is a crazy stat. Every market crash since 1929, every big crash, 2008.com. Look at gold's outperformance. So, I mean, to me, how can I fight that trend? It's never not performed. Oh, I guess it hasn't performed once of these, 20 times? 1980, it went down 20%. Every other 19 times or whatever this time is, it's went up this drastic amount. So that's a trend that's on your side. So, this is some of the reasons why I might be bullish on gold this year, 10, 20, 30% type of gains, because that's the average return in the last almost, 100 years. And that's pretty crazy, guys. That's a lot of data right here. And I don't like to fight numbers. I'm a technician myself. I love numbers. I can't fight trends in numbers. And so that's why I'll be looking at gold. As you can see, the relative outperformance, underperformance in 2022 is a reason why you could have an outperformance in 2023. Hopefully that's really helpful. Is that gold chart helpful, guys? I know there's a lot of new traders on here. Is that like helpful to kind of run through that stuff? Anyway. So that was topic 3. We covered gold. That was Carter Braxton Worth, Braxton Carter Worth, excuse me. And I follow him on Twitter. He tweeted that the other day, so I thought that was a really interesting chart, and I had to say, oh my God, I have to save this and show it to students. This is phenomenal. Just an awesome technician, Wall Street guy. Feel free to check him out. What do we got here? Topic 4 comes back to, we're going to quickly be done here, about 8 minutes. Topic 4 comes back to really just learning from mistakes in 2022. And, there's just a couple that come to my mind where, I see the charts, I read the charts, and you have to, I think what I really realized in 2022, and obviously I didn't get to trade 2008, I didn't get to trade the 2000.com bubble, but I've always been love the sort of the short side trade. I've always loved the seller's trade. I know 90% traders love to buy long and they only play long. But I think there's a lot of money to be made on downside trades. And, being a short is a little bit tricky. But what I mean by that is there were some really awesome charts I found in the beginning of the year. And The first one that comes to mind is that NVIDIA trade. And I took like a 20, 30K loss on puts 2 days, a day and a half actually prior to when NVIDIA started selling off from 188 all the way down to like 115 in like 9 days. And I really kicked myself for that trade. It was a really tough month or two, just knowing I took that 20, 30K loss, and who knows what those gains could have been like. And I had the right thesis. I had all my T's and Q's. I had all my red flags. I had the PEs, and I made an awesome call, and I just didn't have the conviction and trust my gut. I was a day or two early, and I think what really is I'm going to try and do more in 2023 is not oversize into trades super like right away if I have the conviction. Maybe let things play out a little bit more, buy longer dated calls or puts for the move to actually give it some time and breathing room for the move to play out, right? That's another example like Tesla. If you bought puts, yeah, the weekly puts were paying, but they were so volatile, you could easily lose money on those. Whereas if you just bought 3-4 weeks out and just let the Tesla stop loss rate just go down 9 days red. Obviously, you can't predict 9 days red, no bounces, but the price action was showing no bounces, right? So, it's another trade where I think it just takes Wall Street and Main Street a little bit longer for them to actually hit the sell button, right? It's a lot of money being sold into it. So, we as traders expect moves to happen right away. And I think my biggest mistake in 2022, where I got away from in 19 and 20 and 21 years, is I always was pretty patient on letting my moves, but 2022, things were so volatile, emotional, and choppy that I sort of just quickly took small losses or quickly grabbed tiny gains. And I never really let my trade ideas play out. And I think it would have been, a much sort of better trading year and focus if I let sort of those things play out and happen. And then the second thing would be sort of leaving my stop losses, like giving maybe my stop losses some more breathing room on a multi-week trade setup. So like a longer trade setup. If I'm expecting something to happen over the next few days or weeks or month, maybe just give it a little bit more runway. Don't be so quick to take my losses. And I think when trading small caps over the last, 2019, 20, I didn't really trade that much in 21, 22, but when those crazy things were happening, I always kept my stops really tight, and it was really sort of beneficial. But in large caps, it's a little different. The big drastic moves don't happen as fast as they would in a small cap time frame, and so that was a little bit tricky of a movement shifting back and forth last year as well. The other thing I think I learned from some of my mistakes in 2022 is really sort of about appropriate sizing. And sort of scaling in, whether that's option contracts for longer dated calls or puts, or whether that's scaling into a long dip or a short dip, right? Like the Alibaba hit that 58 mark and bounced from 58 all the way to 90 over like a 6-month period, over like a 3-4 month period. That was a crazy trade when it just got so oversold where you just waited for the chart to hit 50s and people just sort of had that risk on. The next day it bounced like 20% or something ridiculous. There was some crazy trade and moves in the markets this past year. And I'm thinking there's going to be some potential crazy movers this year as well, and maybe different sectors or industries. So be on your toes, because a lot of these moves could be very lucrative both ways. And so, that was another thing. And then my other thing would be for trading options. I think what I'm going to do is really focus on more in the money, longer dated expirations. So none of that ODT crap, none of that stuff. More focused on next week, next month. Sort of a little bit slower, less stressful, not emotional, just longer dated puts or calls. The percentage gains aren't going to be as crazy, but at least you can call the trend and guarantee yourself potentially a nice profitable trade setup while keeping your stop losses under control. So that was another thing that I think this year I'm going to focus more on. More in the money, longer dated things from a contract perspective. And then the last thing, I'm going to say this to all the new traders and all the traders that follow me is, this is the best, because this is the one rule I think I'm going to really install. And I was pretty good in this years ago. Walk away when you're up nicely. You hit your goal for the day. You hit your goal for the week. Shut the computer and walk away. I'm going to force myself to do it. I hate to overtrade. You give a few back, lose 2 or 3 small trades in a row. You take away from your profitable day on a great trade setup. Or if you're down and you're like, no, I'm going to get it back. And then you start to force. And then you start to get in a red hole day. And then now you're like, excuse my language. You're like, shit, like now I'm down for the week. But I had green 4 days based on my rules, but I'm down on my 5th day because oh shit, I didn't listen to my rules. I kept trying to trade on a red day, get it all back, and I was over trading, blah, blah, blah. I didn't take a nice setup. It wasn't A plus for me. And so that's the biggest one for me, I think, is get up and walk away. And that's whether you're hitting your goals or whether that's, you hit you hit your stop limit for the day. I'm down, a grand, I'm down 5K, I'm down 30K, 100K, whatever the heck your stop limit for the day is or in your head, right? I hit that number. Let me take a breath. I'm going to get up and walk away. Tomorrow's a new trading day. And I think that's the biggest sort of thing I'm going to take into 2023. Is walking away, whether that's a green day or red day, whether you hit your profit goal, you lost your profit, you lost your loss goal, whatever it may be, right? And that's sort of how I'm going to look at 2023. So hopefully those mistakes. I'm only saying these guys to potentially help you guys, right? I imagine you guys are over there trading yourselves. It could have been a really choppy year for you as well. I don't know. It could have been a really great year. It could have been a terrible year. But these are all things that as traders, you're going to learn something new every day, right? Warren Buffett's learning something new every day. He's in his 80s and 90s. I mean, these guys, they know everything. But how do you learn and better yourself and become even more successful the following year? And so these are some of the things I'm looking at to potentially change and relate to this year. And then topic 5, guys, really just this is it for the session. Topic 5. I see we have like hundreds of viewers on. This is awesome, guys. But topic 5 is really this, guys. I'm going to leave everyone with this: is you're only as good as your last trade. And what I mean by that is, Kathy Woods, for an example, had an incredible 5, 6, 7 year run. And her fund got decimated this past year, all the way down to like 2015, 16 levels. Just lost all of its gains. And things can happen quickly, right? Things can happen really, really quickly. And consistency is key. But really the biggest thing here is that, okay, that was, people are going to have bad years. Warren Buffett's going to have bad years. You're going to have bad trading years. You're going to have great trading years. It's about how you then take it to the next level, right? So if you had a bad year, a bad month, bad week, bad day, forget about it. It's in the past. Tomorrow's a new day. Next year's a new year. And that is what we get to do tomorrow. We have a fresh start. Zeros across the board. Doesn't matter how much you made. Doesn't matter how much you lost. Doesn't matter how much you cried. Doesn't matter how much you laughed. Tomorrow is a new year, a new you. You get to focus on the things that you wanted to focus on this year, whether that's trading, family, health, life, whatever it may be. Tomorrow's that new year. In terms of trading, tomorrow's a new year of trading, right? How do we get good habits? How do we start with good habits? How do we start with study habits, right? Do we wake up at 7 a.m. every day? Do we wake up at 9 every other day? Do we get our coffee at 9:30 or do we get it at 7:30? Like, these are all little things that can help you become a good trader, is organization and discipline. And these are, things that you maybe want to focus on in 2020-2023. How do you better yourself, right? These little things all go into being a profitable, strong, disciplined trader. And so I'm kind of going to leave you guys with that. This is your year to make it, build it. It doesn't matter what happened last year. If you have 8 good years out of 10 years trading, guess what? That's awesome. You're green for 8 out of 10 of the years. It's incredible, right? If you're green 7 out of 10 of the years and you have huge green years and big red years, guess what? You're still green out of that 10-year period, right? So look at the markets, look at yourself, look at your trading journey as sort of a marathon, not the sprint approach. Don't look at, what I hate about the whole social media thing is a lot of these people will post these like, oh my God, 500%, 1,000%, 2,000. That's not happening to the norm. And if it's not happening, it's just so like unlikely, low percentages. Take your base hits, take your small base hits, hit your goals for the day, stop trading, move on, hit your neck, wait for the next day. Have patience, move on. So, these are great sort of rules and things. And the more you do that, the more likely you can potentially be successful in this. And, I'm just going to leave you guys with that. And you just keep studying, fighting hard, working hard. There's great communities here like myself. There's great communities on YouTube. There's some awesome, there's some good guys, on StockTwit, some Webull. There's great opportunities across social media. There's podcasts you could sign up for. There's so much knowledge that at your fingertips these days where you can really study and become sufficient and really learn how to read price action, make trades, hit your goals. And don't get so caught up in what people are saying on social media. Trust your gut, trust the charts, learn what you've studied and done, and sort of that's how I would look at, sort of going into this year. No one knows what the heck's going to happen in the markets, but the only thing we do know is we can follow price action. up or down, we can make opportunities and create opportunity trading opportunities for ourselves. So I'm hoping this session was helpful. If you guys could just post some comments in the right before I sort of shut it down. Was this helpful? Was this great? We walked through price action today. We walked through the indexes up and down. We walked through the positive and negative price action. We walked through mistakes. We walked through motivation. And then we talked through sort of the gold outlook. I showed the central banks, and then I showed Carter Braxton Worth, and so I showed a bunch of stuff. But I'm hoping this is really helpful. If you guys are looking to join thousands of our premium members, you can just put. You can just see the Discord info on the right. You could just join. A lot of everything happens in real time within the Discord. Feel free. I do also post some trade ideas on StockTwits and Webull occasionally. Not as super active there because obviously we have a great community of traders and knowledgeable folks within the Discord. That's where most of the information and sort of content is shared along with charts, etc. So feel free to check us out there, as well as please hit the subscribe button here on YouTube, guys. This is an awesome channel. I do hours and hours of prep time for these meetings. I really hope you enjoy them. I know folks share it with their family, their friends, their loved ones, whatever. It's really great to learn here. Terminology, charting, etc. Charting can also help with investing and long-term stuff. It's really great to talk about the markets with other sort of like-minded individuals and obviously hungry people like yourself. So this is great channel to learn. I'm going to keep obviously running this channel. We've had so much great success on this channel and awesome comment and feedbacks that we'll keep running this. So this is great. And yeah, guys, let's make 2023 about you guys, and let's trade well. Let's start off the month, hopefully strong, and in the coming days and coming weeks. And remember, you're only as good as your next trade. So, whatever happened last year, this year is a new year, guys. So, good stuff. Happy New Year. Love you guys, and we'll see everyone tomorrow, bright and early for day one of 2023. Hope it's an awesome one for you all. Take care, be healthy, and stay safe.